Good afternoon, everyone. It's Mark with Marketwise Capital, and this is the weekly review of Friday, July 20th. As we always do, we'll take a peek at where the market is today, walk through any volatility or standard deviations in relation to the SPY, and then also take a peek at the world view in individual sectors. And I think it's important also to review where we are for some of the key stocks that we've talked about in the past. So let's get into it. First and foremost, let's take a peek at where we are in the market. Today we are still in a neutral quiet zone. However, we had a fairly good week as earnings started to come out, starting with the banks and then some materials as well. But still in the neutral quiet range at a 0.45 on a 25-day look back. And from a RL10 positioning perspective, we have rolled over, which makes us slightly concerned, especially combined with an overbought scenario on a 260-day look back. We are at 0.85. We did sell off in the last few days. So the NDX10, or the overbought oversold indicator, is down to 0.68. As you noticed in the last, looks like 3 out of the last 5 days we were in the oversold, and hence you saw some selling off in the last few days. From a risk Z perspective, we are in the summer mode with actually risk on, in which we will closely monitor that. However, actually that may be a risk off. It may have rolled over slightly. But we are also at 9% above the 200-day moving average, which is in a growth mode. So from an assessment of where we are in the market, I have reservations going into the week. We have increased our cash position to about 20% of the portfolio. From a standard deviation of the SPY, you'll see that the RL10 has maxed out on the 18th and now is subsequently rolled over. This is typical as it ebbs and flows between one standard deviation above and one standard deviation below. But you'll see that in the lower right-hand corner that we've started to roll over. So that is a slightly bearish indicator that we should see some struggles in the upcoming week. Now earnings could change that dramatically as a lot of tech stocks are coming out. This is a more detailed look at the risk index. Still from a historical perspective, we're well within range. Nothing that's a indicator of overbought or oversold, so this could easily continue to reach a 1.9, 2.0 standard deviations, or it could be a baby rollover, as we saw back here as the market sold off. So I'm anticipating that there'll be a slight sell-off here unless earnings are fabulous. If you looked at Microsoft, that was an indicator of where the tech was. They beat, they raised, their cloud business was fantastic, and we saw a $3, $4 increase at the open and then sold off. So that may be in preparation, or it just could be a Friday clearing out of accounts. When we take a look at it from the world market, as I mentioned a couple of weeks ago, we did like Latin America, and we're monitoring both Europe as well as Asia. Latin America clearly has made the turn. It was up 3% this week, in a very good week. We are in a position there. We think that it was totally overdone. When we take a detailed dive, I'll illustrate what I mean. This rollover of the RL10, which is the black line crossed here. However, we were still in a downward pressure from the strength in consistency index. So we did not take a position until probably 2 weeks ago. I'll show you in more detail on the other screen. But it is rising. We're now at 64, and I don't actually see much resistance here for this to continue on. The Qs started to show a little bit of resistance. It clearly is rolled over on the RL10, so we're kind of in a monitoring position. It has been the best of the world indicators. However, we are cautiously optimistic, as I like to say, in regards to the Qs. Earnings will clearly indicate where we stand there. From a sector perspective, we still have the real estate and utilities, although, as we mentioned, we thought that there would be a sell-off in that space because of the high SQNs. So if we look in detail of the real estate as an example, we see the rollover here happen on the RL10 crossing the RL30. Subsequently, we saw it in the Strength and Consistency Index, and we were significantly over 150 on the historical perspective of the symbol quality number. So when it gets up into that range, we clearly are on the watch for a rollover, and we saw it this week. The ones that we do still like are the industrials. When we look on the other side, so we have the XLI that I talked about a few weeks ago, also materials, which is still struggling in part because of the China conversations, as well as the industrials. But the industrials have rolled over, so we did get a kick. And I also mentioned the banks or the financials. The financials did get the 2% with some strong earnings. So we're still on those same three camps. We did take a position in metals, which I'll show you as well. However, we're not totally comfortable with that right at the moment. But we do see the safe havens still on the strong, but now starting to possibly become more of a risk-on trade. So, and we did close out a position on staples, which I'll show you. So when we look at key stocks, we always do, we always look at the ones from a short perspective and a long perspective that are at the high or the low of their SQN. And so let's start with the low, and if I can click out of this. So we mentioned Constellation Brands a few, maybe last week. We did take a position in that. We think that that is totally overdone. We did see some interesting activity in TSN, which will be on our watch list as well. You also have Philip Morris. However, these 3 or 4 are where we'll take a deeper dive into. On the other side, the Monster beverage, I'm particularly interested in. I think that has run, although we have seen unusual option activity in that. However, that dates back into the early June. So Mondelez and Kellogg are both turnaround, so those probably are on the way up, and Pepsi we're staying away from just yet because all those are in reasonable territory. Monster is the only one that I may have some interest in a short. I may also take a peek at some of these as well, but you'll know, that's probably why. Let me take that off for you guys. I was wondering why they were all food and beverage. So now if we take a peek at the highest, ones that we're interested in is MSI, depending on how things go. Costco has clearly made a nice run. There's our Monster and Duke Energy. But those are the ones that we're particularly interested in. Monitor has made the reverse, which I'll show you as well as MSI. So those are the ones on that side, and then again on the other side, we took a position in Constellation Brands. I believe this is Goodrich Tire is totally starting to fall off. This could be a collapsing dragon. And Alcoa had bad earnings. We're waiting for the 3-day rule and some strength in that, but there could be an opportunity in that as well. So let me show you in detail a little bit more of what that all means. Review what we did in the past 2 weeks. So, as always, let's go through the sectors first. So, SMH, we're still in a position that we took at the crossover of the MACD as well as the strength in the RL10. We're holding that position. We're monitoring that to see if there's some choppiness, since we believe the market is slightly overbought, that this could be a potential rollover. If not, we're going to continue to ride that. Biotech, we closed the position on the biotech in part because we are now in a narrow channel here. We'd like to see a breakout past the Bollinger Band. However, we are on the high side of a price channel, so we closed the position as a risk management on top of the high. Home builders, we have a position. We like this one, especially if it breaks out. We could have a very good run on the home builders as it breaks out. When you see this, again, when you see this narrow channel and you all of a sudden get a breakout of that, like this example here, which is even more narrow, broke out, we see the extra run associated with it. So that is something that we feel relatively strongly about. The materials here, we have a position which rolled over. We're monitoring this closely. We're in the choppiness here. We could close that position if we see further weakness. Energy, we don't have a position. Financials, we do. Financials, again, could have a great opportunity if it breaks support here at the 28 level. We could have a nice run after that. They've been beaten up. Same concept, they've left the Bollinger Band. Typically, we may add a second position here. We haven't done that due to what we think about the overall market. Industrials, same look, crossover, low on the price channel, good opportunity for a run. We've rid this from 72-ish to now 74 over the past 2 weeks. Technology is, this is one of my favorites, as I've mentioned in the past, one of my favorites when it breaks out almost above the zero line with a low price channel. Usually you get some good explosion up there. We are now, have we maxed it out, or is it just pausing as we've seen in this choppiness back here? Something we will monitor. As I mentioned in the earlier part, we've closed this position. We took this position when it was at the worst of the sectors, and it broke through. As you notice, it made a run after it broke the Bollinger Band in a tight pinch. We're now in some choppiness. We think that there might be some struggles here at the support, so we took the risk off here. We'll see how that plays out as we go forward. Utilities, same thing. We closed a position early last week in which the same conversation, it broke on a tight pinch, had a great run. We've now stopped. It is starting to curl up. This may, what we call emerging dragon, may start to funnel and then break out further. If it does, we will re-enter the position. However, we're not convinced that that will happen. On healthcare, again, one of our favorite breakouts, broke out here. We took the position. We subsequently closed the position as it rolled over on Friday, as we got a little bit more loose. Consumer discretionary, I'm not sure why we didn't close the position. We should have. We had a very great run here, closed the position. It reversed on us in our favorite position. We had it. I'm not convinced as why we shouldn't have closed it on Friday, but we haven't yet. As I mentioned, we did take mining, same concept about 2 weeks ago. It's now in this choppiness. We hope to have the explosion across, but we're not convinced of that one either. And so let's go into a few of the details of the ones I've talked about. 2 weeks ago I talked about CAT. We took a position right on that Monday. It's basically flat at this point as materials has struggled. CSX, we got a huge winner on, in part. Our favorite, again, rollover above the zero line. We were in a losing position with the red line as to where we were going to stop out. However, earnings came to the rescue, and now we've made a $4 move, or roughly 7% move in 2 weeks. Boeing's just been fantastic. This seemed to be like the no-brainer. Crossed over. We took a position that Monday, and subsequently we've had a 340 to 354 move and really never a struggle. So those have been all great. In the last video I talked about 4 or 5 different stocks. We'll quickly go through that. Lam Research, we're okay, nothing special. We took a position in the 172-ish range. It's at 177. Not bad, not horrible. 10-core has been fairly good, 103 to 106. 3% gain. We had a great gain. We decided to continue to ride it. We will continue to ride it. Broadcom starting to get the reversal. We did not take a position here, although you could see how far away. This is the fair value line, or the RL270. This thing was extremely beat up. People didn't understand the acquisition, and subsequently now we're moving toward moving back toward that 270 line. We have yet to cross over, so we're not necessarily taking it, but we're monitoring that. Schwab was great. We got a great earnings. That is the best when you get great earnings, and it has been beat up. So we had taken a position 6 days ago on the crossover, and we've seen the move from 50 to 52. We had it all the way up to 54. It pulled back on Friday. Constellation Brands, I mentioned that we were monitoring that. We have now taken a position. We took a position on Thursday. As we see the crossover happen, we think we will have a stop here at the low, which is 211.15. So we'll see how that one progresses out. FedEx, we also took a position. We took a position a little bit late. We should have been more up here as the crossover. I would have liked to have done that, but in honesty, we took a position on 716 as it entered the Bollinger Band. We've got a little bit move on that, not too bad. I think I also talked about Latin America. Latin America is a fantastic win. We've seen this thing from 30, had a little bit of choppiness, never really a worry. And then subsequently now we're at 31.99 or 32, so 6 or 7% gain over the last 2.5 weeks. All good. We've mentioned TRN in the when we looked in detail. You see this explosion happen. This actually was mentioned on halftime show, and we saw some good growth out of that. We are in a pinch here, and now it's exploded. I would love to see a little bit pull back so we can get some value, but then this could potentially take off. S Corporation, we're not doing anything with yet, but we are on the watch there. But we do intraday trade those. CI is one that has a lot of interest to me, in part because we are in that narrow pinch. We're about to break out above the zero line, and we have a lot of runway. If it can break the 178.09, 179 mark, I think we could have a nice runner here. I will be closely monitoring and taking positions there. Deere, Deer is something that, again, we're monitoring. We see good support here. We haven't taken a position yet. We could have taken one back here and then subsequently got stopped out, but we didn't. Goodyear looks to me like a short. However, it has been so beat up that we're not convinced it will continue. But at this point where it breaks down below, this is the opposite of that pinch going to the upside. This is the pinch going to the downside. So there's a potential here of a short. I wish I shorted it right about there. And could see continue beat up. JB Hunt has our interest. We have stalled here, building a support. If we see some strength here, we will take a position here on the upside. And that is about it. Oh, except there's a couple other shorts that I'm interested that I mentioned about. Monster Beverage, you see that the crossover has happened. Now, this could be just a crossover here and a steady and then turns into an emerging dragon out. So we'll have to see some weakness, but if there is weakness, we will pile onto a short, in part because of the SQN number that is significantly higher. However, we are in a gap. So you notice the gap down here from 228 to 3.1. It could be filling that gap since there's no real resistance in that. So if this does roll over, then you could see downside to, at a minimum, 59, 58, and then subsequently we're looking at a 54 range. Motorola is one that has our interest as well. It has been extremely good. Has this run ended, we would have potentially lost in this space, although we would have lost a little from here to here. This could be the time, especially if some of the technology earnings are not so hot. So subsequently we would short this as well. Southern companies, it's in the transportation side of the conversation, but this looks like an awfully good short to us. Built support here. Doesn't seem like it has energy. There very easily could be a crossover to the downward and have downward pressure. High on the price channel, crossed over, looking like a pretty good short over the next week or two. So that is all I want to cover for this weekend. This is Mark Woodward with Marketwise Capital. Appreciate you listening.